5, the new push by President Donald Trump to limit credit card interest rates from an average of 24% to 10% would save lots of Americans hundreds of dollars a month. There is no law limiting rates, and banks say they need more guidance about the plan. Banks and their stocks did take a hit in the market today. And even though today is the deadline, millions of credit holders haven't seen any change. Tonight, what a 10% cap could mean for your wallet. Here is reporter Ben Briscoe with a reality check on a plan with lots of questions.
We're putting a one-year cap at 10%, and that's it. They know it. They've really abused the public. The credit card companies have totally abused it. I'm not going to let it happen.
The president posted a couple more details on Truth Social. The cap would last for 1 year, and he'd like it to start on January 20th. But there's still a lot of questions, including if he needs Congress to make it happen. Prominent Democratic Senator Elizabeth Warren said she would work with Trump to get the cap passed. And Democratic Senator Bernie Sanders actually filed a bill last fall to cap credit card interest rates, but it never came up for a vote. If rates were at 10%, a cardholder with a $5,000 balance would pay about $42 per month in interest. At the current average rate of 24%, they owe about $100 a month. The idea is that by paying less in interest, you could pay down more of your debt.
This could really backfire.
Ted Rossman from Bankrate says banking insiders believe they'd have to cut back on who could get a credit card. In fact, there's an industry study that suggests only 1 out of 10 people would actually qualify for a new credit card if rates were capped at 10%.
That's because credit cards are unsecured debt. They're not backed by a car or a home or any tangible asset. Banks' big worry is people might not pay them back. And I know a lot of people think that credit card rates are too high, but the 10% cap is just so low that it would not be workable for them.
He worries people might have to use worse alternatives than credit cards.
Like if you really need money for a car repair or groceries and you don't have cash on hand, if your credit card goes away, do you turn to a payday loan with a 400% APR?
While a 10% cap on interest rates is still just a proposal, there is something you can do right now to lower your rates. Get a balance transfer card.
You could also get a 0% balance transfer card for up to 24 months. That's a really interesting comparison to this president's proposal because he's talking about a 1-year 10% cap. You could actually get a 2-year 0% rate if you sign up for the right balance transfer offer.
Of course, the key with the balance transfer card is to pay your total balance off before your 0% interest rate is over. If you don't, the rate goes way up.
And here's another note. The power of political pressure by the president could be enough to drop rates without an executive order. The president has used that bully pulpit before to push drug companies and tech giants to make big changes. Again, what happens with credit card rates remains in limbo.